1999, so stocks peaked. Stocks plunged after 1999, but interestingly, technology adoption didn't miss a step. And so after that, what happened was people used the internet, they implemented more networking infrastructure. That grew very steadily, and there was a kind of an exponential process whereby several years later, people suddenly realized, like, oh, this internet revolution, it really is happening, and the growth is there, and suddenly the valuations went very high again. I would not at all be surprised to see a very similar dynamic where people swing from excessive optimism to excessive pessimism, but in reality, as a technology platform, adoption tends to move pretty steadily at about 20 to 30% a year growth. If you look at e-commerce, if you look at network equipment, if you look at mobile phone adoption, all of these businesses grew in their mainstream adoption phase in terms of usage about 20 to 30% a year for something like 15 to 25 years. And that adoption had very little to do with the macro environment. It had very little to do with the stock prices of those companies. Eventually, they all caught up.